Hello and welcome to another update video about Ethereum. It continues to hold our support area for now. It did rally quite a bit here to the upside in the last few hours. However, I'm not convinced that we are already in a breakout. It could be, certainly. I mean, we need to be ready always when we're hitting these support areas. But is it convincing? In my opinion, not yet. And it is, in my opinion, not convincing yet because we haven't completed this correction to the downside. I mean, they can always rally. You know, there's no rule that says it has to come down lower once more and everything. As soon as these support areas are touched, we can be in a breakout. Yeah. And for Ethereum, however, that would have to be some sort of a WXY pattern. A WXY can never be the first choice of analysis, and therefore I'm still skeptical. The ABC is the standard pattern, and if the ABC fails to develop, for example, because it cannot create a proper 5-wave move to the downside in a C wave, yeah, I mean, that's possible. You know, you can always get these WXY patterns. What's the difference? And then we talk about the problem here. So the ABC structure is the standard. A wave down, yeah, we had a B wave to the upside, and the C wave down, ideally in 5 waves. 1, 2, 3, 4, 5, with each of the subwaves as an ABC. I've just moved from the last video, that wave 3, from there to here, but that doesn't make a great difference. It could either, you know, both versions are likely, but bottom line here is ideally I'd like to see at least one more low, just because it does look, you know, unfinished with how we have it, because of this B wave high, we only have basically 3 waves down. Can you see that? And it could be a W, an X, and a Y wave. Technically possible. Is it likely though? Well, you know, it's certainly not unlikely, but it can't be the first choice of analysis because a WXY is just a more complex pattern. It is one that whenever it occurs, something sort of went wrong in the correction, and it was the market failed to create or complete the correction properly. That's why for me, it's always like when I see that, and when it should really do another low and it doesn't, then I don't want to be too early to confirm a breakout. Surely, you know, it could happen, and we always need to be ready when the price, let's say, reacts to the golden ratio and starts to rally to the upside from our support area, trend reversal area. However, I'm still of the view that one more low is preferred. Well, it is preferred because it would be the ideal structure. I mean, don't get me wrong, this is the lower time frame, right? So things can change quite quickly. I had a few comments of people, you know, could it be this, could it be that? Yeah, it could be theoretically everything, you know, it's a correction. So in a corrective wave structure, it's often more important to focus on the pivot points, the support areas, because these corrective waves can morph into more complex structures. So in a correction, you need to know that Elliott wave counts can change frequently. You get these sudden spikes, you have to face headwinds and things like that. But we talked about all of that in many previous videos. It's all about not what could happen, but what should really happen. And ideally, we should get one more low, at least one more low. But yeah, I mean, if not, then I want to see proof. So because it would then be a WXY pattern if it breaks out now, I need to see evidence. I need to see first price rally above 1800. That at least would indicate with a higher likelihood that the bottom is in, but it would really only be confirmed above 1860, last week's high. That's what needs to happen now, because the situation would be different had it done its proper 5 waves down. Then we can be very sensitive towards like breakout structures, right? And rallies. But until we get a correction completed in a clean way, it's a bit, you need to be a bit skeptical about upside, right? But yeah, that's just a bit of education stuff here. Important to understand is that Ethereum is currently still holding support. As long as we're holding the support area, we can rally, obviously. This is one of the trend reversal areas. Did highlight to you, depending on which scenario is going to play out, we either find support above 1662 or 1472. You can treat it as one large support area or 2 separate ones, depending on which scenario plays out. We have one scenario in which we only need a shallow correction. We've got one where we need a deep correction. Which one is really going to work out, I don't know. There's no way of saying that, what the market needs. If I had to make a guess, or if I had to say what I'm leaning to, I think I am leaning towards a shallow correction. The reason is that a lot of the altcoins are already deep in support, so they can't really handle too many more lows. So ideally, it's gonna maybe make one more low, maybe two more lows, and that's it, right? So and ideally it's holding 1662, but if not, it's gonna drop into the yellow support area. Also not a problem, also part of the bullish wave count. So either way, against 1472, the trend is up and we can focus on higher. The support areas are very clearly defined. They are well known. 1662 and 1472 are the key, let's say, invalidation points of these structures. And below 1472, a change of count is required, but not necessarily bearish. You know, we've done a lot in the last few weeks and months, and the trend is up for now. All right, that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.